We are live on Oz Property Investors, live and late and large, and bringing the big names and having the big fun. Guys, big session because, and I'm going to say, pop your suburbs in there because we'll get Ash to do a bit around the ground. So if you want an area of Perth sort of looked at from a rental, but also what's going on in sales, she'll be able to, so the top suburbs will go through those. But Ash, going to be a huge session. Perth is still largely the talk of the town. 22% the last 12 months, according to Cotality. If you look at the total return, 27%, which includes the rental yield.
Oof,
but big session here. Is Perth still going to continue to boom in 2026? I don't know. I think I probably know the answer to that. But Ash, how are you going anyway? What's happening?
Yeah, very, very good. And I am going to disclose that I feel like you guys have absolutely put me on this pedestal of being like the expert all over Perth. And I know a lot, but I'm really a little bit stressy that someone's going to ask me about a suburb and I'm not going to have an answer for you. So I'm going to do my best. But I do feel like you put me right up the top. So I'm really trying to meet that today.
Well, you do. You do. I think you undersell yourself. You are an absolute expert in Perth. You've been a property manager in Perth for a very, very long time. And we've dealt with you constantly when we were buying in Perth. And like Jeff and I were incredible. You've got so much insight and you shared so much in here. And the funny thing is when we go back and listen to those sessions that you did, you were spot on. So every time we bring you on, you give us some insights and it's like, boom. Yeah. Okay. Well, that happened. Oh, okay. Yep. That happened. Oh, you mean there's still some legs? Yeah. Okay. Right. She was spot on. Okay. Interesting. Yeah. So I kind of,
fingers crossed.
Is it round 4, Jeff? 3 or 4?
Yeah, it is. But to put Ash's mind at ease, yes, you've been in real estate, working real estate since 1999, so over 2 decades here. But I think that's where like people look mostly at the data, and I'm sure you take a quick look at the data, the reward data, all that sort of information, SQM. But I think beyond that, you actually have the real world experience, which is where a lot of people are lacking. So I think that's where you come to the fore and you can talk to, okay, great. Well, this is happening. Here's what I'm sort of seeing starting to come through. Here's what landlords need to consider. Selling costs or costs of holding, the things that investors aren't considering that they're not going to be able to get elsewhere. So, but Ash, before we go into this, I just want to say that we do have our regular disclaimer, and information is this is general in nature, not taking into account your personal needs, objectives. We're not go and seek specific financial advice from your accountants, brokers, financial planners. We're not liable for any loss caused, whether due to the hosts or guests of this recording. So now we've got that. I like that we do that at the start now, so I don't have to say it about 800 times. But Ash, you as I said, you began your career while studying naturopathy, but you also took a part-time job in real estate and fell in love. You started at reception, so you've worked pretty much most of the jobs in the business. So you have a broad brush experience, and you were the 2023 operational leader from Brewa, and recognized impact agent and ambassador as well. So you also contribute a lot for charities and not-for-profits as well. So that's what I love about you. You are an investor advocate, PM, property manager, and business owner at SoCo, and founder of your own amazing podcast, PM Collective. So now that I've got all that out of the way, so you aren't simply the mogul of Perth. I want to know, in 2 years, because it has been almost 2 years since you had you on the show, what has changed?
Not a lot has changed. We're still in a very busy market, but I guess where I get a lot of frustration, and probably a lot of property managers get frustrated, is that the media is telling us one thing and we are experiencing another. And the problem is that the media is giving a very, very broad range, and they are also pulling out situations like big home opens and rents going up $100 a week and things like that, which is actually quite often a minority and not the majority. And so when we've got eastern state landlords hearing that, it's very, very hard for then property managers to try and explain, no, your property is not going to have 100 people coming through. No, we can't get that dollar that you want, because it's very misaligned with what they're reading about and then what we are experiencing on the ground. So I do have a love of sort of being, very, very truthful. There's some things that I'll say here. There's some things that I'll only say if I'm on a phone call privately with people about certain areas. because it's very, very different. So we are seeing definitely from a rental point of view, it is starting to slow down with inquiries. Probably last time we spoke, I might have mentioned about quality of tenants being a bit of a problem. It's actually becoming a bigger problem, quality of tenants at the moment.
Wow.
So if you are fortunate enough to have some, good inquiries on your property, you got to go through and check them properly, because people are lying. And do you know what's actually really, really interesting? And I should also disclaim that I'm not out to offend anybody as well, so please don't take anything I say offensively. But there's some people out there. There was an application we were processing. He had been caught evicted by his property manager, and we did a reference. He gave that property manager's name as the reference. They were like, "Don't touch this person. We just evicted him through court." And we declined the application. But then the person still came back and said, "I'm confused. Can you please go back to my application and recheck my references?" And we were like, what's wrong with, like, in our head, we're like, what's wrong with you? You've literally just been caught evicted, and now you're putting your property manager's details down as a reference. It's the mentality of what and behavior of what we're dealing with at the moment is incredibly strange. So people that are don't have great references, I don't think they actually realize that they're not great tenants. I think they think that they're fine, but they're not. It's really weird. So that's really a behavioural issue that we're having to combat at the moment. I had a situation with my team the other day where they're like, "Ash, can you just go in and just check the listing? Like, is there something happening on the back end? Have I not uploaded it correctly? I've got no one coming to my home open." And this was a property in High Wycombe, which is normally really busy. And I was like, "Lisa, like, the property's online, it's live, it's looking good." And she's like, "Why don't I have anyone coming through?" And I'm like, I have no idea. So, but then I've got a home open tomorrow morning in Baldivis, and we cap our home opens at 30 people. So we don't actually personally allow any more than 30 people in one instance, and it's capped out. So very, very inconsistent. We are finding, so while Baldivis, and I mention it because a lot of people here will have properties there, a lot of stock levels. Yes, you've got to be a little bit conservative with your price and be at the bottom end, not the top end, but it's leasing quite fine. Then we go north of the river up to Yanchep, where we're finding that a lot of investors now, their builds are finishing. So a lot of stock coming on the market now, and not getting a huge amount of inquiries for Yanchep. So that's very interesting. Yet the stock levels aren't really, the rental stock levels aren't much different to other suburbs. So I guess one of the main differences from when we spoke a couple of years ago to now, I would say that there's probably a lot of investors that were building where their builds are now complete. So that's probably a big thing. And the second thing that's been a massive change just recently is investors are now changing managements a lot more. So a lot of the business that's coming through is from people changing property managers, now sort of understanding that they actually probably need to have someone at a certain caliber to really push the how do I explain it? Like, to help the investor really with their portfolio on a holistic level, with education support. There's more required from a property manager. So where there was a lot of investors that maybe just went through their buyer's agent's recommendation, maybe they just went with the cheapest agent, they're now going, oh, maybe I need to look at moving. So a lot of that movement as well in the last couple of years. So they're probably the main changes.
Yeah, there you go. I just wanted to ask, so Yanchep versus Baldivis, was there a price difference between, because I want to understand, I want to unpack what's going on. Are they the same prices? Or, I mean, I know Yanchep's probably feels like you got to take a packed lunch up that way. Is that kind of versus Baldivis where you can actually get down there a lot more seamlessly, or what is
you have to take a packed lunch to Baldivis too?
Yeah, it just feels closer though, probably because it's newer. I don't know. Yeah,
it is. It's closer, surely.
Is it? I don't know.
Well, we never looked about it. Like, well, not never looked at it.
I don't know if you guys went to Yanchep when you were here last.
No. Yanchep's very north and very much a lot of land supply. So just for people, I've got the map up here. This is Yanchep, which is north. So then you've got the Perth CBD here, and then you go up north. You go all the way up past Alkimos, and then get to Yanchep. And then down south, we're talking about Baldivis, which is quite far away as well. They're both quite far away. But what they have in common is a large amount of land supply that can go on for pretty much, I mean, not infinity, but Yanchep probably does have more land supply that can come about. But it's also about like, what are the building approvals and what's actually coming to market? Are they actually completing the builds? Because what people tell the government that they're building and then what they're actually building is sometimes two different things.
So Yanchep and north of the river, you've got a lot of people that would like migrate from the UK, and they tend to sort of be more north of the river, I find. And there's probably I don't want to say there's less demand of that, but I'm not feeling that there's a huge amount of migration from the UK at the moment going north. We're down in Baldivis. Really interesting conversation I had with Trish, who's our sales agent in that area, and she was actually saying how the demand for Baldivis at the moment is so strong because there's actually a few public special needs schools, and so I think people are actually down that way specifically to get access with families to these public special needs schools because NDIS funding has been cut, and they're now looking at those options. And there are apparently some really, really good schools down there. So that could be something that's really driving more interest because now, like Baldivis, for example, is its own little city, like with its own shopping centres and restaurants. And it's really, and it's a large, I think Trish was saying it's the same size as 9 suburbs, like the equivalent. So it's it is developing into a really nice little community for that, and so big demand. So with Yanchep, I mean, you are going to get your first home buyers up there. From a rental point of view, I don't know. I think sometimes in the market, there's just also not a huge explanation. It's just, it is inconsistent quite a lot. So I think Chelsea, who's my PM up that way, she was just saying, Ash, the properties are just all exactly the same, like literally every single build coming to market. There is also some delays with landscaping at the moment for those new builds, which is, maybe making the property not feel rent ready. So maybe if you're building and you've got a property in Yanchep, like really try and push that landscaping sooner rather than later, because that is taking some time. And that that might just make people feel like people don't want to move into a rental property and have to deal with contractors and landscaping and all of that. But you've got then the investor who's had the property being built for the last 2 or 3 years, and they just want to get rental income in. Like I get it. They just want it listed, but that could be maybe a little factor.
Well, I'm just looking at some of the data for Perth, and it's absolutely crazy. 3,036 for sale in mid-March, which is 39.8% lower than the year before. And same with rental listings, 1,888, which is down 11% for the previous year on year. Like 12% listings dropping is ridiculous. So are you seeing that like concentrated in pockets, like where there is, oh my gosh, the like kind of like that Baldivis situation? Are there areas where, as an investor, I should be a little bit more interested in, or are there areas and also areas on the reverse side of things where, hey, look, just let's steer away from the Yanchep side of things because they're all cookie cutter, look exactly the same. What are you kind of seeing on the ground? So maybe let's just focus on the property management side of things, like where if I list a property, it's going to get a tenant, and I'm going to be okay.
Well, I think that's going to be anything. It's going to be more price point driven. So anything sort of under that 550, 600. And it's going to be the 1 bedroom and the 2 bedrooms. I mean, the units, the villas, they're getting massive inquiries, massive money, to the point where I think to myself, you can literally get the same amount it's the same price for a 1 or 2 bedroom unit closer to the city as what it is a house in some of these other suburbs, but people just want that 1 to 2 bedroom unit. And, they're the locations surrounding Perth. So Chewett Hill, Yokine, Osborne Park, Joondalup. The problem with them is that they might be listed for around, I don't know, I haven't checked in the last week, but, maybe let's say that they're listed for around 600 or 650. They're going a lot more. And so while you're going to get that great cash flow with them, I guess the capital growth might be a little bit slower maybe than the houses, but then the houses have already had their big growth. Some of these areas down in Rockingham, I'm pretty sure they're like 75 to 95% increase in the last 3 years. So can that go even more? 100%. Well, I think it actually can, but it has already had that amazing growth. So if I was buying a property and I was just wanting that cash flow and I was going to hold on to it for a long time, so I didn't need that big jump in equity or anything, personally for me, I'd be going Joondalup, Osborne Park, Yokine, Chewett Hill, and I'd be doing a 2-bedroom villa.
There you go.
Villa townhouse type thing. Spicy.
I like that insight because you were able to, I think you were able to actually show your experience there, which is what a lot of people may not be thinking about. And on that, because I wanted to ask you, Ash, who is actually buying the properties over there in the market? Is it mostly, because I suspect the owner occupiers could be driving it, or is it investors still buying up a lot of Perth?
So I actually want to say that I reckon investors have lost their stamina. They've lost their stamina. It's like they haven't lasted. They haven't lasted because, it is a little bit hard, and I get it. I had this really good chat with Trish today. We've sort of talked about it, and probably 20% would be interstate investor or outside of WA investor, 20%, and 80% is driven. But that 80% is not driven by, it's driven by first home buyers, but also from local investors. But when I say local investors, I'm actually not referring to your traditional investor. I'm referring to the parents who are buying a property specifically for their children. Maybe it's investment, but only for a short time till their children's old enough to move into it. So I sort of want to put them into that owner-occupied category, to be honest, because that's their intention in the next couple of years. So where we're finding the parents coming in is either as a guarantor because the kids can only, get a certain amount of money, or actually buying it so their kids have got housing. So that's probably going to make up a good 80% at the moment. And the other thing that she was saying as well was that that these younger first home buyers are literally getting their pre-approval. They're going straight to the agent with their pre-approval to say, here it is, this is how much I can pay. That's my offer. And being very transparent with that. So, and if I can't buy that, my pre-approval is for $820,000.
Give me what I can.
Absolutely. And they just prepare, and it's really interesting psychology because they're just prepared to pay that to get in, and they're not really thinking about anything else. It's just about getting in.
Well, that's the challenge with a market that's moved for the past 4 years, right? Because if you're 20, you're 16, 17, 18, 19, 20, your entire adult life has seen a market just continually grow. And you're just wasting time by not buying and not jumping into it. So you can kind of see why people just throw whatever they've got at it, especially when they get desperate, and especially when all you hear are these horror stories of trying to buy. Because I think, Jeff, we were looking at in WA, we probably got out of there about a year and a half, like a year ago or so. I don't exactly know when it was, but it's very interesting. It's a very interesting story because it's the most populated. It's largest increase in population. It just keeps more people want to go there. I have literally friends from Sydney who I was helping them look for a property, and we were looking here and there, and they just couldn't afford it. And they're like, why are we fighting over these townhouses in the middle of a place I don't want to live when I can go over to WA for $800,000 and have a 4-bed 2-bath on the beach? Like, why even bother? These guys literally packed up their entire life and then moved because of the affordability aspect. And I know we've got a lot of there was a lot of affordability. Like, when does that story start to shift when it's not affordable anymore? Like, when all of this population comes in and they all can't like have $1 million or 1.2, or how do you feel about the affordability side of things with this growth?
So applications with, with the tenant side of affordability, I mean, the applications are still coming in at around that 30%, which is our safe mark. And I feel that it's still going to be able to go to 40%. I mean, that is still it's going to suck with your budget, and maybe you've got to do one less Uber Eats a week, but 40%, I feel like because I'm seeing too many applications come in at 30% or under, I still don't feel like we've got an affordability issue. But if I say that to the wrong person, they're going to absolutely disagree with that. But there's just so many layers to affordability. I mean, I know that, I used to go get my hair blow dried once a week. Well, now I don't. Maybe I want to order Uber Eats 3 times a week and I've had to cut down to twice a week. Maybe I've bought more coffee. I feel like we are a very lazy society, and I feel like if we had to get to a 40% affordability, we should be able to make some changes in our life to be able to do that. But like I said, when the wrong set of ears hears that, they're going to say, well, Ash, you're being too privileged. But I just feel like we just live in a very quick society where we do spend a lot of money, and we should be able to still afford a 30 to 40% spend on mortgage or rent.
Yeah. I think the industry, and we'll talk about this at the back end of the show, and we'll get to some segments of if somebody had a budget of up to 650, because I know you're sort of saying before the show, Ash, there are many, we'll talk to the reasons why you may not give us the absolute gems of the gems, because it's hard to find those these days in WA, in Perth. And maybe I know you're not, I know some people wanted to know about the regions. So if you may not know too much about those, but I'd love to hear that. What I wanted to say on that is I think it'll probably change when you start seeing the supply actually coming to the market a little bit more. But with the materials cost increases, and which is probably going to cause delays, and I'm seeing it anecdotally myself. I think that still may be delayed by 6 to 9 to 12 months. So I think the long story short, 2026 for Perth is still going to be probably quite a big year, maybe double-digit growth at least.
The challenge that you have with the market that's done 22% is it's not going to, it doesn't fall off a cliff randomly. It doesn't go from 22% to -5%. I don't think 2026 is going to do 22 point whatever it was, 22.2 or 22.4. No, where is it? 24.4% capital growth. 12 months year on year. Crazy. Don't think it's going to do that again, but it might do 16, 17, 18, 19. But it's just not going to fall off a cliff. So it's one of those markets that is, I do feel there's a little bit more risk. How do you feel about it from a capital growth side of things? You have your investor hat on from not so much the property management for the rental, but value wise, are we starting to get unaffordable from a value wise? I mean, where can I get a $600,000 property now? It's going to have to be a unit villa or townhouse. I mean, I think anywhere, I think in WA in comparison to other states, I think even though internally we might think that our yield used to be 3 years ago, it was 6.2%, and now it's 4.2 or 4.7. It's still actually good if you look at other markets around Australia. So I just still feel very strong. I think when I get clients call me and say, Ash, thinking of selling, what should I do? I say to them, you'd want to be doing something else pretty awesome with the equity, because I do feel like that there is still some movement. And I agree with you, Joe. I think it's not going to be anything massive, but I think we're still going to see that steady growth. So if I was to sort of have a magic ball, I would probably still say, that sort of 15% or 13 to 15% is really where I would see it continue. And I had this, I don't know if I mentioned it on the live or just to you beforehand, but, this lunch that I had today, and with an expert in the housing market, and she was sort of talking about that
we still have really another 12 or 18 months. You know, we've still, our supply and demand issue isn't going to ease off, you know, this year. We've still got a good 18 months. So I still feel like we've got the growth in it. Where we're going to have the issue, I think, is just with investors having to adjust their affordability a little bit when it comes to maintenance and the investor stamina when it comes to holding on to that property. Are they in a position to be able to handle a tenant defaulting in rent? Are they going to be able to handle a period of time where they might have, you know, we've got air cons needing to be replaced, you know, the number of, you know, investors that don't have $10,000 put aside to pay for a new aircon, it's really, really hard, or they can't afford for that tenant to be in arrears for 4 weeks. That is probably where we're going to get stress. Oh, 4 weeks is nothing, Joe. Oh my gosh.
Yeah.
That's like,
if you can't afford 4 weeks, if that is the decider, you definitely need to consider selling the property.
Or at least speaking to your broker. Speaking to your broker and or an accountant as well, to understand what levers in the portfolio you can pull. On that, Ash, I want to, because you are the property management extraordinaire over in Perth. So the rental, I keep throwing out adjectives and superlatives maybe, but what has happened in the rental legislation? Because I think that's the thing that has much changed, because last time there was pets coming in, but has there been major changes come?
No, I mean, there was, like, last time we spoke about the rents could only be increased every 12 months. But to be honest, that was sort of best practice with a lot of agencies anyway. Pets couldn't be refused. Some investors still try to refuse them. You can't, you know, we've had many a property manager go down that road of trying. It doesn't work. So don't bother. We had the minor modifications, very reasonable, you know, tenants having the right to do hanging points and things like that. We've had, me personally, not had any concerns with any of that. Investors have been really great with receiving that information, and that's not been anything that's been bothering anyone. Just recently, we've just had a change in the pet bond has just gone up to $350 instead of $260, which is great. The thing just to remember for investors that you can't increase it for your existing tenant just yet. You do have to wait till they have their next rent increase to increase the 260 to 350. So don't think you can do it straight away. And the other change was just the process with bonds. So tenants do have the right now to claim their bond. So they can claim their bond if a property manager is taking too long, if the property manager is not releasing the bond in time. We've got
Why would they not do that? Why? Like, it's held in trust. It's held in trust. So like,
it's, yep. So you are going to get owners that just want to be painful. Then secondly, you'll also have, there's the bigger picture is that there's negotiating sometimes with tenants to, you know, you've got to pay for the lawn. And then the time taken for us to arrange quotes for works and things like that does take a long time. So where the problem is actually not going to be to the tenant's advantage, in my opinion, because if a tenant claims back their bond, like the day after, for example, them vacating, I think it's 14 days that the property manager has to respond. And in that 14 days, when the property manager responds to say, well, no, there's some costs, they've got 10 days only to supply the evidence and the invoices to the commissioner to be able to have that resolved. So it's trying to bypass the court system, and so the commissioner does it. Now, the problem with that is that from a property manager's point of view, I would actually recommend that they use the full 14 days to put their 10-day claim in, so they've got a little bit of extra time to get those those contract quotes and invoices. So maybe on day 12, maybe then submit your response so that you've got 10 days from that. But the problem that we're going to have is that if a property manager doesn't have the time and opportunity to get quotes, to investigate things and to try and get the best price for the tenant as well when it comes to like maybe restoring a lawn or something like that, if I don't have time to do that, I'm just going to go with the first quote that I've got with the person that gives me the price. It might be the most expensive price because sometimes the quickest one is the most expensive. And that's the one I'm going to submit because I now don't have time. So I've got handcuffs on me and I'm not going to be able to try and source that best option for you. So I don't actually think it's in the tenant's best interest, but we will see what happens with that.
I feel like we could have a whole podcast about that. That's just interesting. I'd like to understand the nuances there, but no. So I think I'd love to go around the grounds in terms of price points because, and if you want to hear a particular suburb where Ash to give her insights, now we're going to say this is going to be from a rental perspective, and she may not sort of focus only on the capital growth side of things, but yeah, pop some suburbs in and rent. And Ash knows a lot of Perth. So let's throw out our first sponsor, and let's go to some price points, Ash. So I'm not saying you have to pick the absolute best markets, but just markets where there may be some value in these price points. So let's throw it our first at it.
They said a savior would come, one who could see value where others saw fear, a buyer's agent who could turn data into destiny. Behold, Joe Tucker, an award-winning buyer's agent of Property Principal.
Whoa, what is this? Next thing you're going to see is driving off in our Lamborghinis, throwing cash about. You guys know Jeff and I, we don't really like to roll that way, right? We've been running this group for 5 years. We've been sharing all the data, all the strategies, all the tools, all the tips, all of the tricks that work in today's market to secure the best deals. But here's the thing though, if you're putting a part-time effort into something, you're going to get to a part-time result. And that's no difference with property, right? If you're dropping $500,000 to $1 million on property, this whole she'll be right attitude gets pretty expensive. What is the hardest part about building a portfolio? It really just comes down to time, knowledge, and execution. So if you don't have the time, you don't know what the heck you're doing, and you're afraid you're going to mess it up, then don't do it. That's literally why I do what I do. Most people don't even realize this, but I'm actually a buyer's agent. I run Property Principal's buyer's agency, and we have helped hundreds of investors get the right properties in the right locations so that they can scale their portfolio to $150,000 of passive income or more. Because why? Because we follow some core principles. We use a lot of data to pick the right locations. Think about it, the hot spots before there's ever heat. We get boots on the ground in every single location that we buy in. I have been there, checked it out, and approved the area. And we only buy in areas, and we only buy properties that we would want in our own portfolios. And that's how, in 2024, last year, we got a 21% growth across all of our client purchases when the national average was 4.7%. For instance, Matt and Tina, a young couple, they bought 3 properties with us. They've built over $768,000 worth of equity, and they're still working full time. No dream selling here, but I tell you what, they're going to have a killer retirement. Phil, he's a young kid. He's just bought his first property with us. He's now on to his third, which is super exciting. He bought the first one, $595,000. That is now worth $770,000. He did a great little renovation up front. It's now grown $175,000. That's nearly 30% growth in under a year and a half. So it does take a little bit of time. Gosh, it does get there. Yes, we've had some big wins, but it's not an overnight get-rich-quick scheme. This whole property game is about smart, strategic decisions done well and taking the action. So I'm not here to sell you the dreams, but if you're ready, book in a discovery call. We can chat about what your next move is and if we can actually help. Let's do it.
Indeed.
That guy needs a better beard.
Yeah. I think the verdict is, Joe, that you probably need to get rid of it. I think.
In fact, most votes have been get rid of beard. It is,
and the most important, I mean, depending on your perspective, but the female crowd was saying. I mean, I read through most of those comments, but anyway. So we're going to go through.
What's your verdict, Ash? Do I get rid of the beard or do I keep the beard?
Put her on the spot.
I like a beard personally, so I say keep it.
That's all I want.
I like it how she said she didn't say, yeah, okay. I won't.
That's all I want.
So we're going to throw some markets.
Leda and Parmelia.
Yeah, yes. Under 650, Ash, we're probably not getting anything there.
Are we talking 650 purchase or 650 rent?
Oh no, we're talking purchase, I think, aren't we?
Yeah, definitely purchase.
So Parmelia is down here. So this is Perth here. There's all the water. Parmelia is down, and then next to Medina, Aurelia, Parmelia, Leda. Oh, how is it down there? What's it like?
Yeah, do you know what? I mean, I'm just having a quick look at my end as well. So, the houses, they're being advertised for around 750,000, but they're going to be going for more. I mean, I have to say, at the very, very start, when investors about 4 years ago started buying in there, I was pre-warning them and saying, listen, if you buy there, expect every 1 in 3, 1 in 4 tenants to default, like expect sort of the worst with it. So, and I'm pretty sure clients were buying down there for about 350,000. So really good prices. And while I wasn't actually a fan of it, I mean, I can say our tenancies down there have actually been really, really good. And we don't have a huge amount of issues in that from a property management point of view, which is fantastic to see. And it probably comes down to the fact that it is an affordable area for people, so people can live comfortably and all of that as well. And I think when buying properties, I feel like more attention needs to be given to what the affordability is for the area in terms of like what can that ideal tenant actually afford to pay. And so in there, if you're buying something for 750,000, I mean, the tenants in that area probably have an ideal budget of 550 to 600. I mean, yes, they're going to be paying more than that, but really, if we want to look holistically at like what can people genuinely afford. And I think there's more to the actual return. And I guess I would love to sort of just do a complete sort of like use this opportunity to say to investors that sometimes we can always go and try and, get the market rate. And I know we need to get close to market rate, but I also want people to think holistically about the benefit of having a long-term tenant in a property that is slightly under market rate. You're going to have less property management fees to pay, less turnover, less wear and tear, a good long-term tenant that's not going to be reporting as much maintenance because they get really comfortable in the home. You might actually see the financial benefit in the long run by keeping it just a little bit under at an affordable level. So I just want to take full advantage of this situation with that.
Yeah, no, I think that this is an understated point that people don't actually realize. Because we're investors, we look at the numbers, we look at the spreadsheets, we don't look so much. You can sometimes fall away from the human element of it, which then in effect changes how your spreadsheet looks because you screw it up. Prime example is a mistake that I recently made because I wanted to increase the rent. I went to the property manager. She came to me, property manager, how much do you want to raise the rent? Well, what do you want the rent to be? I'm like, she's like, it's 400 now. I'm like, well, based on all the comparables, I want it to be 420. She's like, okay, cool. Tenant was in there. They've been in there for 3 or 4 years and they were fine. The tenant has said, screw you, 420. I don't like it. I'm not going to pay it. Then all of the things from a compliance standpoint needing to be done. So we now need to re-stump it, which is going to cost $22,000. We now need to fix the aircon. We now need to fix the fan that's been wobbly the whole time. We now need to potentially do a renovation in the kitchen and all these things. The current tenant we're absolutely fine with. So that extra $20 a week in rent has not only cost us, 4 weeks of vacancy, it is also going to cost us tens of thousands of dollars because we wanted an extra, 20 times by 52 a week? Big mistake. And it's because you look at the numbers, you look at the spreadsheet, you don't look at the human element of it where, so that's my little lesson learned. I don't want to
it's say not it's even the human element, Joe. It's just like, well, what is more painful? Like losing $1,000 or gaining $1,000 or losing whatever the potential
using
thing
is. Using a great tenant. Lost a
great
tenant.
I say to our clients, the only person that makes money out of a change of tenant is me because I'm the one that charges the fees. So like, I don't necessarily need that. Like I want you to have, I'm working for you. I want you to have the best financial return. And sometimes that is holding on, for a little bit less. So for a really good tenant, that is. It's still Leda, Parmelia, anything in that town of Kwinana is probably always going to be the most affordable option for tenants. I don't see it surpassing, other suburbs. It's always going to be the most affordable option for people. This is just really like just a real sort of assumption of what could happen. But with the AUKUS happening, and if we sort of see a lot of, a lot of people, we will see a lot of people coming in to the area within the next sort of maybe 12, 24 months, what I think will happen is we're going to have some really good quality tenants coming over from the US, needing to be near Garden Island, going to be coming into those Rockingham, Baldivis areas. And I feel like we're going to probably need to be pushing out the local people, and they're going to need, because there's going to be so much, like these guys that come over, they're going to be on good money. They're going to be paying good rent, which is going to push the locals out, and the locals might have to fall back on areas like Kwinana because it's going to be a more affordable option when we get a big influx of families from the US coming in. So that might be what we happen. So, so in the past, like I'm not a huge, I wouldn't live there, but it's performing relatively well.
Yeah. That's a very interesting insight. Like, because, how many people are doing this? What's this AUKUS thing? What's that all about?
AUKUS, that'll be, is it about 1,000 families, I think, from memory, maybe 1,000 families coming in. So I hear the talk on the street is that like the defence housing is obviously hoping to house them, but a lot of them are bypassing the defence housing and just taking control of it themselves. So again, Trish, our sales rep, she's in the Facebook group for them, and a lot of them are actually going to look at buying as well. So buying, or they're going to be renting. So renting down in the Rockingham area compared to probably what they're paying in rent in the US is going to be an absolute bargain for them. They're going to be happy to pay good rent, and
particularly given, the US dollar we're looking at like $1.50 to $1. So the US dollar is very strong at the moment compared to a lot of countries. Back to our under 650, and then we'll go to the 650 to 850, because I want to sort of we try and keep these snappier these days, Ash, because otherwise get you out and get you onto dinner, particularly in WA. So I think this is probably if you had a budget of under 650, would you say mostly it's probably going to be a villa or a unit or something like that? Is there any areas for houses you consider? Probably not.
I can't see where else you get, unless you went regional. So you could probably go up to Geraldton.
Maybe Bunbury, parts of Bunbury, maybe.
Maybe parts of Bunbury. But you've got Spalding up in Geraldton. I think you'll find probably the price point there. I'm not a regional expert, so but I can from the lady I deal with, Peter McKenzie up there, she's saying it's pretty solid. So from a rental point of view, should be fine. So if you look at Geraldton and Spalding, I think you'll probably get a house there. It's pretty far out though, so I guess it's what people think.
There's no commuting to the city.
No. You fly up to Geraldton if you're smart. So
on the outskirts.
That is almost Sydney to Brisbane. Like it's.
I mean, it's the outskirts of
Sydney to Coffs.
Yeah. Spalding's on the outskirts of. Sorry,
If it was me, I would rather a 1 or 2 bedroom unit near the city than I would a house up in Spalding. And I guess the other thing that I would be in mind, and I actually literally had this Facebook message the other day from someone with a really low budget, and he was like, "Do I get an old house, or do I get a unit?" And I was like, "If that's your budget and that's all you can afford, the house is going to be run down, and I don't think you can afford the maintenance on it. So therefore, if your budget is low, I feel like you should go for a unit where the maintenance is going to be a little bit easier to manage." So that would be my opinion.
And the reasons. Sorry.
Yeah, no, I think that this is something that the units and townhouses and villas are kind of like an elastic band attached to houses. Perth is a pretty good example of this, because the house price moves and then the townhouse and unit market doesn't move as much. And then the price gets to an affordability aspect where you're like, oh shit, actually, well, why am I buying a shithole in the middle of nowhere when I can buy a 2-3 bedroom unit townhouse villa? And then you'll start to see this shoot up. So what's going to happen in the data is there's going to be, well, townhouses haven't performed as well as houses. That is starting to shift. We're starting to see it shift in Brisbane. We're starting to see it shift in Perth. And this is where it's going to get pretty interesting, that we don't necessarily have the data to back it up across Australia. But Perth is a prime example where townhouses and units have just really, really taken off because people just don't, want to buy the trash. They just want to get a set and forget asset. And then that affordability is driving people to there. Sorry, Jeff, I cut you off there.
But also the cost to hold on to it and the maintenance. You're going to get a professional person. You're going to get a great international student. Like you've got what I find with units is the diversity, which is what I love, and that's what I love in what owners buy. So diversity meaning that if you were to buy a house, it's for families, because a single person probably can't afford a house. Where if you've got a unit or like the villa and townhouse, I don't recommend high rise, but a villa or townhouse, you're getting single people, you're getting couples, you're getting small families, you're getting old people, you're getting young people, you're getting students, you're getting international students. It's so diverse with what you can get, and to the point that you might even get hypothetically a family of 4 that literally have just been they can't afford a house anymore, and they're just going to make use with a 2-bedroom. Kids are just going to go back to sharing a room, and I just feel like it's always going to be in demand. So that's where I get quite excited from a diversity point of view, and definitely that cost to maintain it. It's going to be a lot easier for people, and because I'm seeing people selling because they can't afford maintenance and renovations and all of that, they're not able to hold on to the house as long. I think it's a really safe option.
Yeah, there we go. On that, I'm going to move us to the 650 to 850K price point. So now you've got, Ash, if you want to, we can make it 900 or 950, because does 850 give you enough suburbs around Perth to consider, or do we need to? Yeah,
I actually wrote a couple of notes. So the median house price of 785,000 is actually sitting with Clarkson and Dayton at the moment. So Dayton's city of Swan, so out to the east.
In the east, yeah.
So so the 785 median house price there is pretty good. If you
it's out in, is it closest to Midvale, is it?
Down towards sort of
what am I looking for?
Oh no, you're looking at Clarkson now. So Clarkson, we all know because everyone buys in Clarkson, it's north. So that's still sitting with a median house price of 785. And then when you go to the right, you go east, you've got Dayton. So Dayton's sitting at 785, and Caversham is sitting at a median house price of 850 at the moment as well. So if you probably have to go down a little bit.
What's the difference between like a suburb like a Dayton versus Caversham? Is Caversham typically considered nicer, would you say? Or
Dayton and Caversham, I would, from a reputational point of view, I'd probably sit them both on the same. Dayton, you might get more newer properties maybe than Caversham, but Caversham's like our Swan Valley. It's our wine region. We've got the wineries out there, which is pretty cool. But the I actually don't mind those. I don't mind the east. The east of Perth is probably the last location and part that sort of had that growth. You know how everyone purchased in Rockingham, and then everyone moved to Clarkson and Merriwa, and then everyone moved to Armidale, and then everyone moved to the east after that. So the fact that it was sort of like the last growth area, for me, I sort of feel like my gut feels like there's going to be potential, because we've got to go around the whole cycle to get back to it. So I feel like there's still some opportunity there.
It really, you're right. It really didn't start growing until probably like significantly to like, we're talking 20% till like late 2023. So you could still pick up, yes, medians imperfect, but around that sort of low 500s ish, in Dayton around that time, which you're like, wow, that's still pretty. And it's 4.5% yield as well. So, I mean, it's not amazing, but it's still half decent.
It's not bad, yeah.
From a property management side of things, and this is across the board, I guess. Well, maybe it's not. Maybe it is across different price ranges. But what are the things as an investor that I should just be avoiding for a product? Like, what do tenants hate? What are the things that you're just like, oh my gosh, I can't believe you bought that, X, or it has this thing, and you just, no, you shouldn't have. Are there any kind of major red flags that you see that we should be avoiding if we're going to go invest in Perth?
Not really. I mean, no, there's nothing. I mean, the red flags that I'm seeing is more a lot of like DIY maintenance is probably a big thing. People that try and just do a quick little paint over the tiles and things like that, and a lot of that's not picked up from photos, and it's not picked up unless you do a physical inspection. So that's a little bit of a problem. To be honest, one of the biggest issues we've actually got is properties being sold with tenants in there. And I mean, I have a bit of a theory that if you've got a really good tenant paying a good rent, why would you be selling? So if you are selling, my little like ding, ding, ding goes off, because I'm like, yeah, like, why are you selling? And we have unfortunately had a few situations where people have purchased properties, but you, as an investor, you're so excited. You've got a property, you put an offer in, it gets accepted. Yeah, haven't asked, is the tenant up to date with their rent? Have they paid a bond? Interesting, I actually just spoke to an agent today who was saying to me that for tenanted properties, she actually tends to use stage photos. So she does a virtual staging for the tenanted properties. I actually always took that as a red flag, that if an agent's selling with stage photos, but from her side,
what are you trying to hide? Yeah.
Yeah, correct. No, but from her point of view, she said that she does it actually to protect the tenants, so their personal belongings aren't being advertised. I hadn't really thought of that, and I thought that was interesting, but it can be a red flag as well. She's a really good agent, so I know that that's very genuine, but that's where we found owners getting, really caught out with existing tenancies that have been a problem, and then the DIY jobs. So, a lot of people just haven't maintained the home properly, and it's very common in the first 12 months of buying a property to have a lot of maintenance, and that's where it's hurting clients. They just weren't expecting it in the first 12 months. And I guess they haven't held on to the property long enough to reap some benefits and some equity and some cash flow. And it's like you're getting hit hard. And it does tend to ease off after 12 months. But that's really what happens.
Particularly the owner-occupied properties, the ones that haven't. I mean, you sort of don't notice the things when you're not reporting it because you don't need to. Ash, what I will say to everybody looking at these areas, absolutely, of course, you have to go and crunch your numbers and make sure it works for your own circumstance. I did say at the beginning. But Ash, okay, we're going to go to the market that's probably, I don't know, do you consider above 900,000 premium these days, or is that? Because 3 or 4 years ago it was, but now 900, you're probably getting to Heathridge maybe. I think you'd be paying more for Heathridge. I would have thought. Yeah, I mean, it's probably premium from an investment point of view, but not premium from an owner-occ point of view. So I guess where you're going to get the concern is that the higher you go, the lower the rental yield generally, because you can buy for 900, but that area might only have tenants that can afford 650 a week, and you paid 900. That's really where the issue is going to be. And a lot of people are buying and paying extra, number one, to secure it, but also they're probably thinking, well, the property will probably be worth that in the next 2 years anyway. They've got that. Some people think that way, which is fine. But it's like you've got to understand that rent is going to be in today's value, not in 2 years' time. So there's always going to be that mismatch. So I guess I do feel like rents will continue to. I think we've got a little bit of room to go with rent. So we should see a little bit of that growth still. I mean, going into that Heathridge and Craigie and going northwest, you're always going to do well. I mean, they're all lovely suburbs. They're close to the city, good quality tenants, and, professional families, people with less children. So when they've got less children, they've got less financial pressures and responsibilities as well. So a lot of sort of
layers
double
there.
Income families.
Double income families, correct. So you're always going to be very, very safe if you can afford those areas. But typically the rental yield has always been low. Like I remember clients buying in Heathridge and Craigie and Belden 4 years ago, and the rental yields were never as strong as Rockingham ever.
No.
But long term, I think that they will be pretty good with the professional tenant. But they've bought well and relied on capital growth as their priority.
Well, it well and truly covers it, right? The other thing to note for people that are investing and thinking about investing in Perth, the property quality is completely different to what you will see in other areas, right? Like Perth is pretty new, like in Victoria, in New South Wales, in Queensland, like regional Queensland, there are some really old shit shacks. Don't get me wrong, there are some in Perth, but like things were built, like for instance, Rockingham, that whole Rockingham area, right? Like it was 1990s, 2000s, 2010s. That's the kind of era of properties. It's not stuff that's from the 60s, the 50s, the 70s, and anything like that. So it's an interesting thing that if you are, wanting something, cleaner and fresher, it's an interesting thing to see.
I do hear though, Joe, you've got to be a little bit careful of those Warnbro 1990s builds. That's what Ash, have you heard that too?
Oh, look at Ash's smile. She knows all about it.
Oh yeah, I was just going to say, have I told you about that? The Waikiki and Warnbro at the moment, if you currently own a property there, the main thing that is happening is burst copper pipes. But they're just not burst copper pipes. They're burst copper pipes underneath the slab. So it's costing about $3,500 to repair. It generally happens on the weekend as well when things like to go bust. And what it is you end up having, it's actually cheaper just to redirect the pipework, the copper piping, and cut it off at the slab because that's easiest. So if I was going to say that there's a trend, it's the copper piping in those age homes in Waikiki and Warnbro that are absolutely little pinprick hole, and it's causing massive water issues. So I think it was Scott Townsend who had said something about high water prices in Perth being a reason not to buy in Perth, and high water prices are huge at the moment. Our bills here, gosh, we can have tenants with bills $500, $700. It's really expensive.
Wow.
Every 2 months.
Oh, wow.
Yeah. So, but plumbing in that age home, definitely a big thing.
Yeah.
Has there been a property that you've recently had, like, because you help investors buy, right? Like you've got your finger on the pulse with the investor side of things. Has there been a property where you're like, look, to be honest, just don't do it. Don't buy this one. Like what was the situation? What made you say, hell no, let's just walk away?
Yeah, so I haven't had one for a while because people don't even have time to get property management in because properties are going under offer within 4 days. So people are just not really using a property manager as much these days in Perth. So that's definitely slowed down, and which is causing a problem because it is scary because now we've got to clean it up. I've had two recent ones. One was I don't even know if the clients are listening, but I'm not going to be divulging anything personal anyway. Purchased a property. We took on the management. The new purchaser who we managed the property for realised that then once we were trying to do the handover documents that the property doesn't have a bond in from the previous owner. It's in rent arrears and there's issues with the tenancy. He put the property on the market within, I think, 2 weeks of purchasing the property. Was just like, nah, done. Can't even handle it. Very, very quickly. So, yeah, you can imagine us. We've picked up a new management, done all the handover, and then get a call from a sales rep to say that they're listing it. We're like, what are you talking about? It's just sold. So that was sort of one thing that we noticed. Second one, where, things just aren't getting, we had a hole in a wall that wasn't, no one picked up, that no one did the buyer's agent didn't, the selling agent never said anything, and building inspection didn't do anything. And I walked in to go and do the pre-settlement just before settlement, and there was a great big wall. And the problem with that is actually to fix it was about $8,000, and it was pretty, unfair for a property manager to have to call up to say to the owner who's bought it, it's going to be $8,000.
A hole in the wall.
Yeah, it was a fibro internal and brick, and there was a gutter issue which was causing it to get moisture, and all the framing needed to be replaced because of the moisture. It was pretty sad. He ended up selling pretty quickly after buying it, which was a shame, because I was like, I know it's a shitty situation, but if you just held on to it for a little bit longer, you would have forgotten the pain of that. You would have forgotten that. I mean, it was too painful for to hold on to. So So in terms of recent property profiling, going and looking at it, we're just not really getting that opportunity as much anymore, because it is going quick, and also because we're finding that a lot of the owner ocs are buying as well. So
they're expecting themselves.
Yeah.
Okay, we'll go to one question and we'll do an ad, and then we'll start to wrap things up. So if people have areas, because I want to, I might pick out 2 or 3. If people, So
throw your questions in, people. There's some solid value here.
This is a spicy one, and we've got and Vickers, I will say you have to absolutely do your own research in terms of what your numbers look like. Go to your accountant and all that. Alexander Heights, one in Port Kennedy. I mean, Port Kennedy's depends on when you bought as well, but I'm considering selling one in 6 months. Which one should I sell? Don't, Ash, we're not holding you responsible for this, Ash. But
No, I know. I'm very happy to answer. I think there's 2 things that I'd consider. My first thought when I saw that is absolutely hold on to Alexander Heights and sell Port Kennedy, because if you've purchased Port Kennedy, when it was popular and you're buying for 400,000, you would have done very, very well. And I would say to you that, that would have sort of peaked from a growth point of view. So, and Alexander Heights, I'm just finding from a quality of tenants, a lot easier to manage, and the homes there, I don't want to say they got less maintenance, but they just seem to have less going on. So for the ease and for the emotional side of being an investor, I feel like Alexander Heights would be the one that I personally would be holding on to. However, saying that, with the the AUKUS and with the demands that we might find, you might find that the cash flow is going to be pretty good in Port Kennedy, which might only be for a couple of years. But I still feel like for the emotional reliability of holding on to an investment property, I'd be holding on to Alexander Heights and getting rid of Port Kennedy.
I don't know. Yeah, unless there was something holding
rid of either.
Or neither. Yeah, correct.
But if you had a choice, okay, we're going to run to our sponsor.
I think as well with Alexander Heights, I would say that the percentage of growth in the last 3 years would have been a lot higher for Port Kennedy than what it would have for Alexander Heights as well. So.
Yeah, so you feel there's a little bit more to run. That's that eastern corridor, kind of like what you're talking about before.
The river,
just I've zoomed in too much, but
just type
northeast around here. Okay, throw your kind of questions and comments in, guys. There's some really interesting comments about rooming houses that we want to dive in deep into, and we'll come back soon.
Oh, Jeff, I wish there was 3 investing books that covered everything property.
Oh, Joe, there is. Steve has 3 books now.
That I do, guys. I've got 3 books now. You probably don't even have to follow this group anymore. Just kidding. You want to keep seeing and hearing from me, of course, so stay involved. But in all seriousness, if you want to get the full picture of investing, residential, commercial, and development, these 3 books have you covered for the fundamentals. For OzProp members, here's the best part. I'm giving these books to you for free. Just cover the postage and I'll send them right to your door. Go to paliseproperty.com or click the link below and get your copies today. You can also get all my spreadsheets, checklists, and resources free on my website. Happy reading, gang.
Can I just say, Ash, I think you've actually, I feel like each time you come on, you do outdo yourself. Like last time you were amazing. I think this time you're sort of still selling yourself short. So
thank you.
They do say flattery gets you a lot of place, but I'm not doing it for that reason. Yeah, so this is one from Olga, and I know that's the one. I had that line queued up, Joe. I don't know how much you guys at SoCo do all this, but can you tell us about a rooming house? Is it popular or doable in Perth? Which suburb will benefit from it? I mean, probably obvious ones, but...
I wouldn't touch it. I don't touch rooming houses at all. No way. I hear too many horror stories from my property manager friends, and I know it sounds really good to get the individual rents and all of that. But there's that old saying of you make today easier for your future to be harder, or you can make it harder now for your future to be easier. And I think that by doing rooming houses, it might, in the short term, might feel like a really good option with high rent, but it's only going to turn into a nightmare, because so many of our issues that we deal with at the moment with tenants is behavioural issues, and the behavioural issues are so difficult and take up so much time. So to have 4 people in a home that don't know each other and to be dealing with the behavioural issues of that, it's just not what I would ever want to even be involved in doing. There are a couple of people that would do it, and I would say that if you did go down that road, I would choose someone who has a smaller startup property management business, who has the time and energy to be able to put into that. Because if you give that to a traditional property manager who looks after normal tenancies, they're not going to, number one, probably do a very good job, because it's a bit of a nightmare. So go with a smaller solo business owner who can give it the time and energy if you really want to. And I can give you some recommendations of who they would be. But ultimately, for the ease of just having an investment, market rate's pretty good. Just do it the normal way. The other thing with rooming houses is it falls under a different act. So it doesn't fall under our normal Residential Tenancies Act, because it's not a normal residential tenancies lease. So you're going to have restrictions when it comes to breaches and vacancy and stuff like that, which I'm not 100% sure of. All I know is it doesn't fall under the Residential Tenancies Act.
Wow, it doesn't fall under the it's residential. So
it's the same. Yeah, I mean, it's the same in a lot of states. Like each state has its own way it manages rooming house accommodation.
Well,
and it's, I mean,
you've also got an insurance issue, because insurance companies for landlord insurance will ask how many tenancies on the lease as well. I'm sorry, how many tenancies in the property. So ultimately, if you had a 4-bedroom, you might have 4 tenancies attached to a property, where generally in a normal situation you've got 1 tenancy per property. So that will affect landlord insurance and things like that.
But it's also the capital growth play as well. Like if you can get into it is essentially a block of units, right? Like a rooming house is like a small rubbish block of units.
No. Rooming house I think rooming house I'm referring to is someone who's got 1 4-bedroom, 2-bathroom house, and they're renting the rooms out separately.
They're converting. Okay, they convert.
No, they're not even converting. They're just literally renting out each room separately. And everyone shares the kitchen, and then the owner has to get a cleaner, a gardener, pay for the utilities, and they all 4 strangers live together in one home.
Yeah, and I think you need to be really careful that you're not contravening the Residential Tenancies Act as well. Like if they don't know each other, like I think so you just need to be really careful of that, I think, as well, Ash, which you're probably all across. I'm sure. I wanted to. This is an interesting. This person's asked for about 8 different locations, so I'll throw to the last one with my limited knowledge of this area. Huntingdale, Brabham, Harrisdale. So taking us all across Perth, like Huntingdale in the southeast, Brabham kind of up in the not Margaret Valley, but the wine sort of region, and then Harrisdale. And I'll take on Kalgoorlie because I've got my thoughts on that. But what are your thoughts on Huntingdale and Brabham, Ash?
I really like Huntingdale. The reason, again, I come back to the diversity and Huntingdale, Thornley, sort of little pocket there. I love that we've got cheap homes, expensive homes. We've got low income. We've got higher income. We've got professionals. We've got single families. I still love diversity, and I feel like Huntingdale offers a diverse, it's a diverse suburb, so it's got a bit of everything. So that's why I'm a bit of a fan. It's relatively close to the city. I'm just very comfortable with that area. So, got carousel shops there. And you still get a good block of land. You can still buy there for 700, but you can also get 700 square meters, but you've also got a lot of duplexes as well, which are really great. And the duplexes in Huntingdale generally sit on a pretty decent pocket of land as well, like, still a 500 square meter block for a duplex, which is good. So I love they're good solid brick and tile homes. So they can quite often be original but good condition. So that style of home, like that it's probably a 1950s home, or actually maybe a little bit like more like probably 1970s actually. They just renovate really well. So I'm a big fan. Brabham, you've got the newer homes up there as well. So
smaller blocks, is it as well?
Yeah, it'll probably be smaller blocks up at Brabham. We've actually got, I don't know how much, we're about to put one on the market for sale, and one it's about to come on, but I don't know how much we're going to put that on for, but it's going to be, I'm pretty sure it's like more that 900 mark that it's going to be, but a newer home.
Yeah. Yep. I'll chuck in my thoughts on Kalgoorlie. So Kalgoorlie is higher yields mining town. Like, yes, you could argue there's some diversity in the types of mining they're doing. Like, they're doing I think they're doing nickel and copper and all sorts of stuff, which you sort of say with AI and chips and all that sort of stuff, maybe you're going to need it. Boulder is like that sort of town which neighbors in with Kalgoorlie. My view is, like, I wouldn't typically look at that as a buy and hold, set and forget. To me, you really need to be understanding what's going on economically in the town and employment wise. Capital growth perspective, like, I think if you bought around COVID, your yields probably would have been quite high and you're probably close to double your money from a very low base. But for me, you just need to be like, you're putting on your more intermediate advanced investor going to those type of locations. And it can be a bit rough and ready around those parts as well, from what I gather. And the population that's moving there, they're moving there for the mines, for the mining that's going on in and around it. So those are my views. People, the person commenting can take what they feel. Joe, what questions do you have? You want to pick out from them before I ask my
fuel? I want to talk about fuel. I remember seeing these trucks these tires that are like 3 people, 10 people tall. All of those trucks need fuel. There's a massive fuel crisis going on, supposedly. And these mining things need a lot of fuel. BHP, I don't want to look at the BHP. Not that I own BHP shares, but what's the go with fuel? Is this actually a concern for the property market over there, or what should we be thinking about as property investors?
I think last week when it sort of was on the media a little bit, and people did go into a little bit of crisis mode, I think some of the home opens were pretty quiet. So, and I feel like there is a little bit of uncertainty with fuel and interest rates and things like that. So, interesting enough, actually, that expert today was saying that they don't actually think that we'll see any dent in the market for another 2 rate rises, that people won't tend to worry too much until we get to the second one. But the fuel, I think, has put people into a frenzy. And I mean, I don't get myself into a frenzy very often, and I'm certainly not worried, probably because I've got a hybrid car. Maybe that's why I am not as worried. And I think I pay $40 a month for my car to be topped up with petrol. So I'm very fortunate. $40. It's a hybrid, so I get 40 kilometers of electricity or battery out of it, and then it kicks into petrol after that. So I don't tend to go much further than that anyway, which is pretty good. But I think there's definitely a couple of factors to take into account. I mean, my thoughts from my own resources is that it's more of a distribution issue than what it is a shortage issue. And I think that, yes, where the consumer is going to have a little bit of a high price for a bit, but I don't actually, the sources that I've got are not suggesting it's a shortage. They're just suggesting it's a distribution area issue in those regional areas with the independent fuel companies. So that's sort of, but the bigger companies, Shell and Ampol, have got enough fuel and we'll be fine with that. But I said on the Perth Now, they were saying that WA is now declared a state of emergency, which I think is just a way to get these bigger fuel companies to distribute their fuel and put pressure on them to disclose the volume that they're actually holding on to. So I think there's more behind the scenes.
Interesting. Yeah. Okay. So they've got it there. They're just not given the goods.
They're not giving it to the regional places. And so this is what was talked about, like with Easter weekend coming up. It's going to be very uncertain and unsafe for people to probably travel regionally down south or to Geraldton or Kalgoorlie, because you just can't have confidence that you're going to have fuel to get back home. So that's probably, but in a city, in the suburbs, I think will be fine. But I think what I'd love to just quickly mention is a couple of ways that this might affect the investor. So I know that we put out an email to our investors about maintenance contractors and to expect potentially maintenance to be a little bit slower, especially if you have contractors that really try and bulk their workload to certain areas on certain days. So maintenance work orders might be a little bit slower. And then if there is a situation with ordering parts and getting access to parts, whether it's for air cons and things like that, that also might have an effect with the contractors getting things in. Like, we've got a bench top being made, for example, for a property. There might be delays because there's a few people, contractors involved with getting this bench top. People might use the fuel as a bit of an excuse for that. So that's where investors should, just maybe understand that. The second thing that I'd love just to quickly mention, if we can, is because I've seen it come up, and that is about remote inspections, because property managers not wanting to travel and do inspections and routine inspections, and how
which sounds crazy. You get the tenant to do. I actually had a property manager tell me to do the exact same thing, and I had an issue here's the problem, and this is me recording the problem, like just very particular about, don't worry about that, I'll fix that before.
At some stage it'll catch up to you though, Joe. That's kind of my.
Yeah, no, I just got to patch it, but I didn't. But otherwise, I have to. They're going to tell me to patch it, I guess, which is fair enough. But okay, but that sounds crazy. The property manager's going to get the tenant to do it because they can't afford the fuel, but they're still going to charge me the same amount. What is this? What are we talking about?
I really think people should relax a little with it. When I say people, I mean investors. Just relax a little bit and just don't jump and react to it straight away, but just be a little bit more open-minded. And the reason being is that we've got a large rent roll of 1,200, and I have trialed this. Now, I'm not making this change and I'm not doing remote inspections. However, I did want to trial it, and I've trialed it for 5 properties because I wanted to see what the feedback was from owners and from tenants with regards to it. So I'm just going to do 5 and see.
That's great.
I did it, and I have to say that the inspection that came through, the photos from the tenant were fantastic. Absolutely, really, really impressed by it. I think that the reason why I had actually trialed it was actually not to do with the fuel. It was because we had a property manager that was sick and we didn't want to cancel the inspection. So we trialed it so the tenants didn't have to be disadvantaged. They've got the house ready. I can't physically get anyone there. The property manager's sick. Let's just give this a go and just see. And it's not something that we're going to do as an office process, but I'm absolutely not against other agents doing it. And for the pure reason that this is something that the tenant needs to earn the right to. This isn't for tenants that are not a great tenant, cause you problems. But if you've got a tenant that's been in the property for 5 years and is fantastic, giving them the opportunity to have a link where they do submit photos, and as long as they do the right thing by the property manager, then I feel like it could be an option, maybe not for every inspection, but maybe for one of them each year. Now, the behind the scenes from a property manager's point of view is that there's actually still a lot of work. Yes, I'm not driving to it, but there still actually is a lot of work with actually preparing it, because in the back end, we're setting up a template, we're setting requirements. So a property manager has to put in there that the tenant must provide 4 photos of this room. They must provide 2 photos of this area. They actually put requirements in the back end, and the tenants can't progress unless they they do the requirements that have been set by the property manager. Then it comes back, and then the property manager does need to review it. Now, I personally, when I've done investors buying properties that have been on the market for sale, me personally, I can do a very, very good assessment through photos and through video without seeing a property. Of course, going to look at a property is always going to be much better. But what I'll argue is that there are a lot of investors out there that actually don't know who does their inspections. They assume their property manager does it, but they could have the 18-year-old leasing consultant that's also the inspection officer going out and doing the inspection. That property manager that they're dealing with is still reviewing the report that the junior's doing. Maybe they're outsourcing the route inspections. Outsourcing is a very big part in property management, and there are companies that specialize in outsourcing. So don't assume that your property manager is actually already visiting the property, because there are a lot of other ways that we work. And it works well. And I also have loved, like with the 5 that I did try, the maintenance that the tenant put through was fantastic. I could actually see what was important to them from a maintenance point of view. One of them had an exhaust fan that needed to be replaced because it had no cover. And I just felt like they really loved the opportunity to do one. And I think that it could be a thing of the future. It might be very premature for investors to really embrace, but I feel like, fast forward 5 years, 10 years, this is going to be an absolute norm. And I feel like we're stressing over nothing at the moment.
10 years, we'll probably have a robot doing it anyway. There'll be AI.
Yeah. The drone will come in and do it. Yeah,
exactly.
Yeah.
So, that I really appreciate that walkthrough. Because I saw that post and I saw people going, absolutely no way you got it. And I think it was another group, wasn't ours. And there'll be one that come up in there. Ash and Joe, and I'll put my hat in as well. 2026 Perth. What's the verdict? We'll finish off on this, and we'll give you what will Perth continue to boom in 2026? I think for people watching, they probably know the answer, but Ash, what's your kind of crystal ball in 12 to 18 months? What are we sort of seeing in Perth? Much of the same?
I think we'll still probably have. I'm going to guesstimate with a 15% capital growth that we will still see this year, and I actually think we'll see that for the next couple of years consistently. I think that we will get the stabilizing of the Rockingham rental growth. Probably for 12 months, I think that it will be pretty plateaued for 12 months. But the minute that this AUKUS stuff starts, it will, owners that can hold on will reap the benefit of that later. And I feel like that with like rent reviews at the moment, people are starting to negotiate a little bit more. So I just feel like we're going to see a little bit more stable increases when it comes to renewal time, and they will look lower. So they'll look more like $10, $20 per week for investors. And I think that investors should see the value of keeping the long-term tenant with that smaller rent. And know that they're going to still be getting some nice capital growth in it. So sort of balance it out. So that would be my suggestion, a little bit more stable with rental growth, but still a reasonable amount of capital.
Done. 17% for me. I think that's where it's going to land. December, full year, 17%. What about you, Jeff?
13.5. just to put a bit of, I don't know, otherwise I could just say 15. It's all easy. The thing I'd be watching is looking how those builds are going, because otherwise, that's like supply and demand, like if there's, because I think there's going to be, I'm seeing
the pipeline's struggling, man. Like
it is. That's what I mean.
Approvals, the approvals have been super choppy, and then the completions have been even choppier, and then also throw in this fuel crisis.
Materials as well,
The expert today was talking about how that we might see some trouble for people that are building, especially with the smaller builders, that they just, because she was saying that they have only just caught up from COVID. the ones that really hung
just
in
got
there.
their foot in the door,
and they just can't do it again because they're just literally getting out of it. So this is really going to hurt them. So there is a little bit of stress and worry for those that are building if they're with a smaller builder. I just hope that they've got safe contracts. And I don't think there was anything talked about with where the government's stepping in with regards to supporting them. But that's where I would be worried.
Well, the government stepped in for fuel, didn't they? They've done some discount on fuel. I don't know what the exact.
You're obsessed about fuel at the moment, Joe. We'll talk about. We'll get Perplex. We'll get Claude to look at it later on for us all. We'll do that. But what I want to say is, Ash, been an amazing session for those that are, because if you enjoyed this session about Perth continuing to boom probably in 2026, drop us that 5-star on Spotify team. And Joe, take us home. Give us the opportunity where people can reach out to Ash.
Good question. Where can people reach out to Ash?
Are you handballing it to me? I'm pretty easily Googleable, so you can just put Ashleigh Goodchild Perth into Google and find me. But socorealty.com.au is where you'll find my profile and sort of the areas that we look after. And I'm a very, very open person. Even if you've got your property managed by someone else, I am always open to help give any advice or support or anything like that. So don't feel like you have to be a client to call me. Anyone can call me and have a chat about the market and to find out a little bit more. Very, very happy to help.
You are very approachable, Ash, for sure. But also, you run a busy life. So respect Ash's time as well. She is amazing and very omnipresent on social. So admire what you've been able to produce over there. I love Dan. He's been a big contributor to this session. The properties under 650K fly off the shelf. If you can find them, Dan, and move the most as part of their affordability, I would probably say 750 because unless you're buying a unit or apartment, but they're
being advertised for 650, but they'll be selling for 750. That's what the difference will be. That's the marketing price, not the selling price.
Yeah. There we go.
So true. So true. Incredible session. I love this one, Ash. You keep bringing the gold, and it's relevant to what is happening right now as well. There was no recycled stuff from last session. Thank you so much for sharing. If you need a good property manager in WA, you know where to go. SoCo. Let's go buy a property, guys. See you later. Thank you very much, Ash.
Let's go buy some fuel.
Catch you guys.